Hello everyone. This is Augustus back on the charts. In our last analysis, we were expecting a reversal around. I was expecting a reversal around one of the zones here, a double bottom around this place, but I couldn't get it. And that trade I took, it was a loss. Since then, I have not done any analysis on this channel. But today we are going to go through what has actually transpired since our last analysis and look at the way forward. So when you look at the higher time frame, let's go to the weekly time frame and see. When you look at this structure over here, we had first touch, second touch, and probably price may be coming for a third touch. Then we also have first and second touch. So at the downside, we're expecting a third touch. But when you look at the left-hand side, there was a low here. So price decided to extend to even break the low a little bit before reversing. So when you go back to the daily time frame, what we are going to see is that price broke the trend line, test this. So on the 4-hour time frame, we had, let's see, we had a nice impulsive move, bullish reversal move. So after price broke the trend line, even the low a little bit here, we had a reversal impulse followed by a continuation correction, which signifies that we are going to the upside instead of continuing lower. If price was to continue lower, this is the type of correction we would expect, so that price will move it to the downside. But since we couldn't get a continuation correction, but we had a reversal impulse followed by continuation correction to the upside, then it means the momentum for the downside is no longer there. Then we have to be looking for longs. So when you look at what actually happened in the market, we can see that price gave us this nice pattern and respected it. First, second, third touch, it went to the upside. Then price gave us this kind of extended pattern over here. Then we are still in that zone. But on the third pattern that we had, price has actually broken that one to the downside. It has actually broken it to the downside. So we are waiting to see if price decides to continue with the bearish momentum. Currently, price is selling. It's selling. Looking at what price is doing, is selling. So we want to see whether price would continue with a bearish move or possibly come to test this daily zone over here. Well, this is a 4-hour zone. Price may decide to come a little bit up and test the daily zone before coming down, possibly giving us inverted head and shoulder and probably go up. We are just analyzing what price is doing, and the analysis is going to help us to take our entries. So there has been a lot of entries, bullish entries and even bearish reversal entries since our last analysis. So when price got to this high over here, it decided to give us a reversal price action. when you look at the presence of this bearish candle, it is telling us that there is a probability that we are going to the downside. But for me, looking at this bullish move, it's not enough for me to enter a trade. And even if I decide to enter the trade upon that candle, my stop loss is going to be above this, which is 94 pips, too huge for me. So I have to at least wait a little bit before I continue. So I have to get a zone of interest that I would expect price to come and take my entry. And the zone of interest, so at this point, when price gave us this nice 4-hour candle and the risk is too much, we have to just switch to the 1-hour time frame to identify our zone of interest. Of course, let me clear the charts, get rid of all these price actions, and redo it again. So I'll take this out, then we clear all these price actions. Alright, I think I can take care of them out here, and the rest we do it also. So back to the 4-hour, I just want to mark the candle that gave us that strong reversal presence or bearish reversal presence. This is the candle, so it passes through this. So when I'm in my 1 hour, I just look at the origin where that candle started from. So in my 1 hour, I have this here. This is the candle, the last bullish candle before the bearish move. 1 hour candle is there, but for me it is too huge, so I will be going for only the wick like this, and I would expect price to come and test that zone. After price comes to the zone, that is where I am going to look for confirmations to enter. So price obviously came into the zone, and for confirmations, I have been using the 5 minutes and the 15 minutes to confirm my entry. So we will just look at that over there. So let's switch to the 15 minutes and see what happened. Of course, after my 1 hour area of interest, I also refine it in 15 minutes. Refine the zone in 15 minutes like this, so that I see which of the zones that price is actually respecting. So we can see that price even respected the 15-minute zone very nicely. So with this, when price came back to the zone and I want to enter, you know, we marked our zone for the first time, and price came into the zone. We can see that price came into the zone. So even at this touch, and we have this bearish candle, if you decide to enter the trade here, this is a sell trade. If you decide to go short here, Your stop loss ought to be above this, which is about 46. It's cool. So you can decide to enter it, or if you are not convinced with that, you can just wait for price to develop a little bit. So let's go to the 5 minutes and see something. You know, 5 minutes candles formed before 15 minutes. So assuming you want to get early entry, it has to be the 5 minutes before the 15 minutes. All right. So my style of entry, I look for this kind of pattern. I look for an M pattern or a double top. When price comes to the zone, I expect to get something like this before I enter. So this is one thing that I look at. Then again, I also look at this. Price comes here. If it gives me M pattern, at times, if I want more confirmation, I will not enter. I'll wait for price to break the low here. All right, let me take this off. I'll wait for price to break the low and come back into the zone again before I enter. It's like a form of head and shoulder pattern, something like that. Yeah, but in 5 minutes, I mostly use this in 5 minutes. I expect this low to be taken out, a low that was formed from the M pattern to be taken out and comes back to test the zone before I enter that trade. But if you get M pattern, you can enter. And when you get this one, this is in fact the one that I love the most, because most of the time it works out. But at times the M patterns, if your stop loss is not placed well, it's going to take you out. So the most important thing here is that you have to get your zones correctly. When you get the zones correctly, then you have nothing to worry about. So we have the zone. Price came into the zone for the first time. I am not going to go short because that doesn't fit my plan. I have to wait for price to come into the zone for the second time before I enter. So it came into the zone, it dropped for the second time, it came in 5 minutes. Then it gave this bearish candle, but at the end we saw that the bulls pushed the candle upwards. Then again we had this nice bearish candle. So if I'm gonna go short, it's this place that I'm going to enter my trade. Then my stop loss will be above the zone. So I think this stop loss is okay, and it's about 19 pips stop loss. Then I will extend it. One thing I have realized about the market is that these bands that I have over there, the light red bands here and the blue bands and the green bands here, most of the time when price gets in them, unless price is moving impulsively, there are probability of a reversal. There are several times I have seen that price get into those zones, then I'm waiting for price to continue to probably the downside, and it will reverse and take me out at break even before it comes back later. So it's very, very effective. So at times, if I'm TPing, I will wait for price to get into the 5 minute band and I will TP. Or else, another thing is, when it gets there, I will just go break even. If it comes to take me out, fine. If it doesn't, so this will be the first entry, and this is an M pattern. So the other illustration I was talking about, you can wait for a low to be taken out, and this is a low that was taken out from here, and we had this zone that originated. So this is the leg that took out the low. So I've marked the zone. Price came and tested the zone. So something like this, when it comes again to test, I'm not looking for, and pardon again, I'm just looking for a bearish confirmation. Of course, price came to test the zone. It gave us this nice rejection candle. So I can enter the trade here. Can enter the trade upon this rejection candle, and my stop loss can be above this. But if I want to protect myself very well, I can bring my stop loss above this one, but this one I'm going to keep it here. Then look for my TP target. So wherever you decide to exit, you can plan to exit upon 1 to 3 risk reward or whatever. The most important thing is the entry. When you get it right, then the rest you have to manage your zones. So for the first reversal entry over here, reversal entry that we had, so when you come to the higher time frames, this would be our entry. Instead of S entering, I think around here, we could have skipped all those things and entered in this zone. Let me take, just gonna take the other one out. Just want to take that one out. So if we are swinging this, our TP target, or where we expect a reversal from price, is this low. So you can target this low for your first TP target. Then if price also breaks it, we are coming to this zone, this low. And if that one is also met, then we will be coming to this TP. So it depends on how you manage the trades. So for where we are now, we are going to look for possible entries. Assuming we missed the first entry, how are we going to get new entries and take advantage of the price that is coming down? So here I'll be using the 1 hour to mark my entry zones, the 1 hour and the 15 minutes. So when I get it in 1 hour, I just refine it in 15 minutes. That will be all. So after we had this first entry and price broke this low, what I will be expecting is that price can come and test this zone, but obviously price couldn't get there. And the next one is price broke this low. Price clearly broke this low. So I will look for a zone around this area that I will be expecting price to come and test. And depending on what you select, you can use the low here, the lows here, and wait for price to come and test and get an entry over there. But you have to also be cautious because we had these touches first here, our second, third, fourth. So there is a possibility that price could also reverse here, depending on the kind of price action that we get here. So we'll come that when we will come to that when we get to the entry side. Then when you come to this place, price was approaching this low, but we know we are still selling. So it will be better for us to look for sells rather for buys. So price also broke this low, so I think we can include broke, yeah. Let's see, decide to pick this one here. No problem. So the lows, you have to decide which of them you want to pick. So we pick the zone there, and the zone price tested the zones over here. All right, then what next? 4 times price broke this low, this leg came to break this low, so probably this week we will be taking that week into consideration, but this large week we cannot take all of them, so at least halfway of that is cool. So we just do that, and we are good to go. After price tested that one, price came to give this. I'm marking all these entries so that then when you go to the lower time frames, you'll know what to do. Then we also had this here, but 1 hour, I think I'll be going for the week is too long. Right, then the last part that we're expecting price is this zone. We're expecting price to come and test that zone so that we can get our confirmation and enter. So in 15 minutes, let's see what transpired in 15 minutes. So what can I do about the zones here? Possible refinement. Cool. I think the first one, let's see whether we can refine something here. I think when you look at this candle, we can extend this to the top here and include this to the downside. That's a very, very nice candle, so I think we can do that. Then we came to these zones, no sort of refinement there. This is okay. What about this zone? Think we have to extend it to this low that was taken out by the candle. So we have that one as well. Then when you look at this zone, of course, let me include this very well, but in 15 minutes, think we can add additional one here if price decides to extend to the 15 minutes only. So this is the zone we have here. We're expecting price to come and test so that we can go short. So we can use the 15 minutes to enter, but when I'm sitting on the charts, most often if I have some screen time to monitor charts a little bit, I use the 15 minutes and 5 minutes to enter my entries. In fact, that is what I have been using, but because of other equally important activity that may not give me the opportunity to have my time on the charts, I just use the minimum is the 15 minutes, but the 1 hour and the 4 hours, so 15, 1 hour and 4 hour, I also use them for entries. Of course, going to 2023, I'll be doing most of my entries in 1 hour. Yeah, 1 hour, and come down to 15 minutes. If I miss the 1 hour entry, then I'll be waiting for it in 4 hours. So there's that. Now, let's switch to the 5 minutes. and see where we can take advantage of the market. Oh, that's nice. So we had this here, price came to this side. So when you trade in the direction of the trend, you are always, most of the time, saving. That one is profitable than trading against the trend. So even we hit the trend line, but you can decide to still go short, provided you get the confirmation. So price came to the zone for the first time. I will not enter because it doesn't fit my entry criteria. Then it came down, it came for the second time. So for the second time, you had a nice bearish confirmation here. So that's where we are going to enter a trade. And oh, where is the sell? We enter our trade here, and we will be protected with our stop loss. In fact, the stop loss ought to be above this zone, but when I look at this small candle over here, I will extend it and put it above because I know those are the candles that price respects. At first, I used to use 20 pips and 25 pips stop loss, but what I realized with that, I passed most of my 9 setups. I passed them on because they are more than like 30 pips, 28 pips, and even 45. So now I have increased my risk to 50 pips. So assuming I am entering a lot size of 0.1 for the range from 0 to 25, 1 to 25 pips. Then if I get like 30 pips, I'm looking at just halving my lot size. Or I can even use the position calculator to calculate the percentage that I want to risk. Either 1%. I don't risk more than 1%. That's what I don't do. So not more than 1% is what I risk. So let's continue. So you entered your trade here, then price sold. If you couldn't get an opportunity, I said this is the kind of setup I love the most. When you get an M pattern here, you wait for a low to be broken. So if you miss that one, we broke the low, and price came back into the zone to test it and gave us this nice rejection candle. It was very nice one, nice rejection candle. So immediately after the close of the candle, your entry will be there and your stop loss above this. Then you go downside to wherever you want to TP and you TP accordingly. So let's continue with the entries. Let me see. Okay, we marked from this to that zone. Okay. So price came to the zone to test it. For the first time, price entered the zone. Assuming you take this kind of entry, this as the first entry, so the second one giving us M pattern will be this one. Then probably after you get some bearish candle over here, you go for short, your stop loss above this. Then your TP, this one, the TP was very clear. We had a W pattern here. So there is no need for you to continue to be in the trade. Just exit. Alright, someone who also wanted to trade reversal on this W pattern in the bands, you can just enter the trade and move along. Then the next thing is assuming you needed another entry. This leg took out the lows here, so you can just wait and use the origin and just wait for price to come and test the zone. So that one, when it comes and tests it once, you just execute. So it came here, it gave us this bearish candle, so you can execute here. Then your stop loss above this one, 26, let's see, above this 41. It's cool. Then you go down. All right, so you may even decide to enter it here if you see that your risk is too much, especially if you want to put it high. Enter here and you are not getting the risk reward that you need. The price came and this one we couldn't get a strong move, but let's see what happened. So price came and entered the band again, and at this time, let's see our zone. I'm talking about the zone. Let's see the pips that we had for this one. It was 73 pips. So I hope with 73 pips you are not going to take a loss. What you have to, the minimum is going to be break even. So price came back into the zone that we also had the band here. So we are looking for sells. With this, we had our nice double top there, M pattern. So upon this candle, I think I took this trade. Upon this candle, then you go short. Then your stop loss will be above that. Then your exit, obviously, after you get this rejection candle, you can exit. There is a 5 minutes and then we had 104 pips. 104 pips, huge pips. Wow, price came into the zone several times for this bullish move. There's another entry that I use then for the lower time frame. Just upon one entry, when I get a very nice pin bar, then I'm going to enter. So something like this, but this is a reversal, so I'm not going to look at that one. Now price came back again. We have this nice pin bar over there. Look at how we had a nice week over there. So I will just enter a short here, a short position over here. Then my stop loss will be about this. So during the time that I was using 25-20 pips, I wouldn't have entered this trade, and this would have turned out to be a nice trade. So I updated my my trading plan, and now I'm taking those trades. So my maximum loss, stop loss is 50 pips. That's what I have done currently. So this one, what was it? 109, and the risk reward was 1 to 3. It's nice. So the next thing was we also marked the zone. This one I didn't refine it in the system, and I think the refinement processor. This one was good there. So price came there and tested the zone. This is a sell, and I had this nice wick rejection. So this kind of pin bars, straight away I enter them. If I'm not convinced enough, I can wait for the low of this pin bar to get broken before I enter. So I can enter here, and my stop loss will still be above this one, and this is 44 pips. And my TP target, when it gets into the zone, I can just enter, and the risk reward is 1.67. All right, so let's continue. So price came back here. We had this zone here. Price came to test the zone, but let me confirm from 15 minutes and see something. Okay. I think after this, price couldn't come and test this zone again because I decreased that one. So I'll be rather going for this week here. Week over here. Alright. Something like this. Then at the end of the day, price decided to come into the zone for the first time. For the first time here, and it came here for the first time, but I have to wait for an M pattern structure. So upon this rejection candle, the 9-week rejection candle, I'm gonna go for short. My stop loss will be above this, then just leave the trade to run. Then again, assuming I missed that entry, we broke this low here. We broke the low here. In fact, we broke a lot of lows, and price came back to test. So when you look at this impulsive leg, it took out this low. So we can look at a zone like this and mark it. So price came to test those zones and gave us this candle pattern. So assuming I was waiting for a stronger confirmation, this is where I'm going to take my trade. The risk is huge, but then under 5 minutes is not too huge. So I can place my stop loss here 23 pips above this, or even this 30 pips. I think it's cool. Then I will be taking home, let's say whether the 1 to 3 risk reward, now 1 to 2. It's not bad. How many pips? 75. It's not bad. So trading like this, I think is better than the way I used to trade, because at those times I used to miss a lot of trade because the stop loss is more than what I have in my plan. So I just made some changes to my trading plan. Then let's go to the next one. The next zone that I had it here. Price came to test it for the first time, and again we have to get an M pattern structure. So we're expecting price to come back to the zone and test it. So actually this is where it came into the zone and tested for an M pattern. So our entry is going to go here, and our stop loss nicely placed above that, and we are going to go down like that. Then after this move, I think, assuming you missed that entry, you can see that after the M pattern is formed, we have to find a low that is broken. think we had this low broken here. So we expect price to come back to the origin. Obviously, price couldn't get there to test it. It continued to push downwards. I realized that it rather came to test the low that was broken and confirmed it. So it said we are going down, and so if you cut that entry, you can also do that. Price also broke this low, and since price is not coming back to test the origin, it came back to test this low that was broken. So you could have also cut that entry upon these weak rejections, or even when this, I think this one was better one. This one was better one. Then our stop loss will be above the zone here. Then we'll extend it and TP'd when price entered into the band. So currently, I think that was the last entry on this one. So GBP USD is still in a bearish trend. So currently, what we are doing waiting for is price to come and test this zone. Then we look for, I think, our confirmations in 5 minutes. Now I have some screen time, so I can use the 5 minutes and the 50, especially the 5 minutes. But when I don't have time to sit behind the charts, what works best is the 1 hour and possibly at times the 15 minutes. So the entry, when price gets to the zone, we just expect something like this, a double top. If it is like this, it broke the previous high, then it is better. So we have this double top. That's one of our entry confirmations. We are going to enter. Then the next one, price comes to the zone, give us this low. It gives it a double top, first confirmation, it breaks the low second, then it comes back to test the zone. That's a better one. Then we enter. The next thing is, when we get a weak rejection, a stronger one, like a pin bar, you get a candle with a stronger weak rejection. That is where we don't look for an M pattern or this kind of structure looking like a head and shoulder or inverted head and shoulder structure, just the candle. That one we are going to enter straight away. So for 15 minutes, this is what we look for, and the rejection candle. We look for this and the rejection candle, M pattern and the rejection candle. And when I'm using the hourly time frame, I just look for a stronger candlestick confirmation. That's a 1 hour and 4 hour. That's what I do currently. Now going forward, our focus is not going to be on GBP USD alone. It's not going to be on GBP USD alone, because I have seen that, when you look at this kind of price action we have currently, let's go to the higher time frame and check something. Price is corrective. It is very, very corrective, although it is coming down, but it is corrective. And when you don't take care, you are going to lose money in the corrective stage. Yeah, you are going to lose a whole lot of money in the corrective stage. So I am trying to stay away when price moves impulsively and it wants to correct. For example, when you look at this here, we have an impulsive move. So we have to wait for price to correct. That's why we are having this move. When you look at this impulsive move, we had a correction before the next move. Impulsive move, correction before the next move. This impulsive move, we had a correction before the next move. So because of that, I'm adding different pairs. So currently I'm looking at about 10 pairs. That's 4, 6, forex pairs, we have GBP USD, Euro dollar, USD CAD, Euro CAD, AUD and pound yen. Then we have gold, Nasdaq, US oil spot and BTC USD. The reason is that the first reason is that I want to focus on the impulsive moves, and the other reason is also that for now I am trading in the higher time frames like the 1 hour and the 4 hour. So I don't have time to sit behind the screen and catch every move on GBP USD, but when I have other pairs and I'm focusing on the impulses, if I don't catch an impulse on GBP USD, there is a high probability that I can also catch an impulse on probably AUD yen. So now, going forward in 2023, these are the pairs that I will be analyzing alongside. But of course, when you have one pair to do video about it, I think assuming all the pairs are in a defensive mood, meaning they are correcting, and still I want to do a video, then it will be on GBP USD. Other than that, the impulsive moves that happened in any of these pairs, that's what I will be analyzing going forward in 2023. Thank you for your time. Thank you for being with me, and we shall meet to analyze the market together another time. Bye bye.